Okay, so you hear a lot about the stock market, right? The day-to-day ups and downs. But what if I told you there's a much bigger, quieter financial storm brewing? It's something that's been building for years, and it's called the Great Refinance. Today, we are going to pull back the curtain on exactly what that is, how we got here, and why this slow-motion crisis could be one of the biggest economic stories of the decade. Let's dive in. So, let's start with a number. $1.8 trillion. It's hard to even wrap your head around a number that big. I mean, that's more than the entire economy of Canada. And this number, this is the amount of commercial real estate debt that's coming due between 2025 and 2026. We're talking about the loans for office buildings, giant apartment complexes, the shopping centers you go to. A huge chunk of them were financed with loans that are about to expire, all at the same time. This creates what people are calling a massive wall of debt that has to be refinanced in a world that looks completely different from the one where these loans were born.
And really, that brings us to the core question of this whole thing. It's the multi-trillion-dollar question. What happens when all these loans, taken out when money was cheap and easy, finally come due in a world that, frankly, can't afford them anymore? I mean, everything has changed. Interest rates, property values, the way we work. We are about to see a historic collision between the easy promises of the past and the cold, hard reality of today. So let's unpack what that crash is going to look like.
To really get the scale of what's happening, we have to jump in the time machine for a second. We need to see how this mountain of debt got so huge in the first place. And that story starts in what feels like a totally different economic universe, the era of cheap money.
Think back to the period from 2019 to 2021. The Federal Reserve basically put money on a massive clearance sale. To get the economy roaring, they slashed interest rates down to near zero. This made borrowing money unbelievably cheap. The goal was simple. They wanted businesses and real estate developers to take out huge loans, build things, expand, and hire people. And honestly, it worked. For anyone looking to borrow, it was a golden age. Money was practically free.
And if that wasn't enough, the Fed also used its other big weapon, something called quantitative easing, or QE. Now that sounds super complicated, but just think of it like this. The Fed turned on a giant money hose and sprayed cash directly into the financial system. They started buying up trillions in assets, flooding the banks with money. This did two things. One, it made borrowing even cheaper. But two, and this is the really important part, it sent a huge signal to every investor out there that said, go for it, take risks. Money is abundant and easy to get.
So what you end up with are two completely different realities. The world of 2021, when all these loans were made, was a borrower's paradise. It was an easy money world with 0% interest rates and QE flowing like water. But the world of 2026, when the bills come due, it's the exact opposite. It's a tight money world with the highest interest rates we've seen in decades. The party is officially over and the hangover is about to begin.
And this is where we get to the heart of the problem. This is the Great Refinance. What happens when those loans made during the party have to get renewed in the harsh light of the morning after? This is where things start to get really, really messy for a lot of people.
The key phrase you have to understand is the refinancing gap. Let's make it personal. Imagine your home mortgage is up for renewal. You go to the bank and they tell you, well, since you got your last loan, interest rates have shot up and your home's value has actually dropped a bit. Because of that, they're only willing to lend you, say, 80% of what you still owe. That terrifying shortfall, that gap between what you need to pay off the old loan and what the bank will give you for a new one, that is the refinancing gap. And it is the ticking time bomb at the center of this crisis.
Okay, let's walk through this example because this makes it crystal clear. Back in 2021, an owner has an office building worth $10 million. They get a $7.5 million loan at a fantastic 3% interest. Easy peasy. Now fast forward to 2026. The world has changed. Maybe more people work from home, so the building's value has slipped to $9 million. But the real killer is that interest rates have more than doubled to 7%. The bank looks at the new numbers and says, sorry, with the lower value and much higher payments, the most we can lend you now is $5.85 million. So here's the owner's nightmare. They have a $7.5 million loan they have to pay back, but they can only get a new loan for $5.85 million. That leaves them with a $1.65 million gap. They have to come up with that cash out of pocket right now. And if they can't, they default.
Now take that exact nightmare scenario we just talked about and multiply it. Thousands of times. Tens of thousands of property owners, all across the country, all facing the same impossible math problem at the exact same time. When you scale that refinancing gap across $1.8 trillion of debt, you don't just get a bunch of individual problems, you get a predictable, dangerous, and systemic pattern of financial collapse, a domino effect.
This is how it almost always plays out, in 3 clear steps. It starts with insolvency. That's the moment our property owner realized what they owe is more than what their building is worth. You're officially underwater. The next step is delinquency. You've run out of cash, you can't borrow more, so you just start missing payments. You're in default. And that leads to the final stage, bankruptcy. The lenders who are owed their money have no choice but to step in and force you to sell your assets, to liquidate the property so they can get back whatever slice of their loan they can.
And this whole process has a name. It's called deleveraging. It's a painful cycle where the entire system has to get rid of its unsustainable debt. And for the people caught in it, this isn't some strategic business move. No, it's a desperate scramble for survival. They are being forced to sell whatever they can, often at a huge loss, just to raise cash and try to stay afloat.
And this is exactly how a problem that starts in one corner of the economy can spiral out and affect everybody. Think about it. When thousands of desperate owners are all forced to sell their buildings at the same time, you get a fire sale. The market is flooded and prices just crater. And that creates this vicious cycle, right? Falling prices make it even harder for the next guy to refinance, which forces more sales, which pushes prices down even more. And this isn't just a real estate problem. It becomes a huge problem for the regional banks that hold all these loans.
So far this all sounds pretty terrible, right? A forecast for economic doom and gloom. And for many people, it will be. It's a crisis for borrowers, for banks, and maybe for the whole economy. But, and this is a big but, in every major crisis, there is also a major opportunity. For a certain kind of investor, one with cash ready to go, an event like this isn't a disaster. It's the distressed asset sale of a lifetime.
This quote here just nails the psychology of what's happening. During a market panic, prices are not set by logic or careful analysis. They're driven by pure, raw fear. And that creates this huge gap between the fire sale price of something and its actual long-term value. For savvy investors who can see past the chaos, this is the exact moment they've been waiting for. They aren't just buying a building, they are buying pessimism at a massive discount.
And this, my friends, is the art of bargain hunting. You've heard the famous Warren Buffett line, right? Be fearful when others are greedy, and be greedy only when others are fearful. Well, a crisis like the Great Refinance creates exactly these kinds of distressed financial conditions. It lets patient investors with cash on hand buy perfectly good, valuable assets for pennies on the dollar from people who are being forced to sell out of pure desperation. It's the art of seeing value when everyone else is just seeing panic.
But it's really important to zoom out for a second. This whole refinancing crisis isn't happening in a vacuum. It's playing out against a backdrop of several other major economic headwinds that could pour gasoline on the fire. We have to look at the bigger picture. Let's just tick through these. First, you have government debt at absolutely staggering levels, which means there's less ability for a big government bailout. Second, there's the Fed's own history, this pattern of creating huge bubbles with cheap money and then popping them with high rates, leading to a bust. Third, the smart money is already getting ready. We're seeing investors sell risky stuff and move their cash into safer, recession-proof sectors like healthcare. That's a huge red flag. And finally, history shows us that cleaning up a mess this big isn't fast. It can take a full 10 years for an economy to really recover, a period sometimes called a lost decade.
So when you put all of these pieces together, the takeaway is pretty clear. What we are likely watching isn't just a commercial real estate problem, it's the start of a classic, textbook deleveraging cycle. It's a messy, it's a painful, but it's an unavoidable process of correcting for years of too much debt and money that was just too cheap. It's a great economic reset.
So it seems like this great deleveraging is coming, and it's going to bring a lot of turbulence, no doubt about it. But the real question is, for you, how are you going to see it? Is it just a dangerous storm that you need to hide from? Or, for those who are prepared and understand what's happening, could this be the distressed asset investment opportunity of a lifetime? I think your answer to that question could very well shape your financial future for the next decade.